let me just start from daily time frame, okay? Or normally, okay, let me just make things one thing clear. I always start with this. The structure that we are trading is called impulse and impulse and correction, or correction and impulse, because the market moves in impulse, correction, impulse, like that. How the market moves, yeah. It's something like this, guys. I always draw this thing: impulse, correction, impulse. Yeah, this how we are trading, guys. These are the patterns. This is a bearish, a bear flag pattern. So what do you do? This way you enter as soon as because this is an impulse. The market is pushing from the top, creating this correction, and as soon as it breaks this correction, that's where you enter, and your stop loss is just above this correction. Are we together? Even
Yes.
when you're coming from the bottom, impulse, correction, and impulse. Yeah? So again, you enter here, the stop loss is here. This is how we're trading. We look for impulse and correction. It's just the simplest strategy ever. Okay, it's very simple, but it needs some work. You have to work on it, keep on practicing. And let me just maybe pull out here something that I see that I can. Okay, for instance, here I'll just pull out something here. I see something here. This is what I'm talking about, guys. This is something like this that I'm talking about. You can see that the market here was pushing from the top here, the impulse, and there's this correction that I'm talking about here, and the impulse again. Okay, so these are patterns, guys. These are patterns. If somebody asks you that, if you're, what are you trading? I'm trading impulse, correction, because somebody will say no. Yes, it's recorded. Yes, yes, it's recorded. Pamelo. Yes, sorry, it's recorded. Yeah. So here is a correction, is impulse, and is correction. And we are trading the patterns, guys. These are patterns, the market patterns. Okay. Because that's how the market moves. There are patterns each and every time. There are patterns in the market. So let me just move this again and start and just analyze the chart now, starting from 1 week. Yes, I can start from 1 week. It's fine. Okay, let me just do this. Just clean my chart, and to clean my chart so that we can move together. But I will still together, guys.
Yes.
Yeah, because I want you guys to ask as many questions as possible, because we're gonna be looking as well at the reversal patterns. I've been seeing a lot of reversal patterns, and see where do you enter when maybe the market is creating a W or an M shape or head and shoulder, or maybe a triangle, or maybe the market is creating a wedge. So guys, we're gonna start on. Let's start on, what I'm pressing now. Let's start on 1 week. It's fine. We can start on 1 week, guys. We can start on 1 week and see what the market gives us. Let's start on 1 week. So the first thing that I do, I mark my swing high and my swing low. I mark my swing high and my swing low. This is my swing low. This is my swing low. This is my swing high. Here. This is my. If you can see here, we are about to create new new highs. I mean new highs. So from here, I move to 1 day, daily time frame. Daily time frame, okay, because now I've noticed the structure first. I've noticed the structure that the market is pushing up. That's what I've noticed there. Okay, just get on. Okay, I want to sort out my thing. This is a daily time frame, guys. This is a daily time frame. So on daily time frame, I'm not gonna go far with it, but what I'm gonna do, let me just adjust this. What I'm gonna do is, I can see here, this daily name, I can see here, there's one touch, there's second touch, there's a third touch. You remember, guys, when it was Friday, I said, go back, go and check daily time frame and see what is happening. I see a long buy on the US30. I see a long that you're going to be buying for such a long time. So that's why I said you can buy and hold. Again, here there's another something. There's a here. This I can say altogether this is a correction at the same time. Yeah, we are on one day, guys. We are on 1 day. I don't know if we are still together. Because we can even start here and make these lines here, but this is an old history. This is an old stuff here. This is April, this is March, just like that. But here, in order for us to have a good good view of what because the old data cannot if the data is too old, it cannot affect the future, guys. It cannot affect the future. Let's start. We're starting here. This here, when you start from here, it was the 21st June 2021. Start here, of which is this year. Okay, cool, guys. Let's move to 4-hour time frame now. Let's move to 4-hour time frame and see what is there on 4-hour time frame. We've marked this is the first touch here, second touch, the third touch. Yeah, the power of a third touch, guys. The power of the third touch, because when the market comes to that third touch, that's where the market start pushing. That's where the market start pushing, guys, up. So if you go on 4-hour time frame, here, those people who are trading the zones now, those people who are trading the zones, okay, you can see here what's happening. Yeah, here, if you look here, there was a first touch here and the second touch, and the market push up. Yeah? Somebody will say this is a double bottom. If you go to maybe a lower time frame, you will see here. You will see here that there was something like a double bottom. A double bottom, yes, yeah, a double bottom. We can say a triple bottom because of this touch as well here. Yeah, but I'm not there, guys. I was just passing that zone because, like, if you mark your zone, for instance, okay, I'll mark it on a lower time frame. Okay, guys. Somebody saying something? Oh, okay, I thought somebody was asking. So you can see, guys, you can see that the market is pushing up because here this is where we are. This is where we are in this touch. In this touch, that's where we are right now. We are here, guys. The market is pushing up here. What do you expect? I'm expecting here now the market to keep pushing up. Okay, let me just take this one. Oh, I can use this, is fine. Expect the market to come here, push up, and it can break the structure, maybe, and just come here and run around this channel. That's possible, but you cannot predict the market because what it can happen, because these are the highs there. These are the highs. The market can push up here, above here, and just break the structure. And just break the structure, not push down. Anything can happen as well. But I'm waiting, my eyes are widely open, waiting for the market to get to this level. Anyway, we know that now the market is pushing up. Are we together?
Yes.
Yeah, we know that the market is pushing up. Even here, you can just do something like this. For instance, here, sort of like a correction. Yeah. Okay, let me just, sorry about this. Let me just clone this line and take it and put it here. So now we can do something like this and expect the market, as soon as the market cross across this line here, of which is this our correction, break the structure, and thereafter you can buy. Your stop loss is just below. But you cannot do that because we are still on 4-hour time frame. But yes, you can, even on 4-hour time frame. If maybe you are a swing trader, you can do that. You can absolutely, you can do that, guys. Okay, you can do that. But there's something that I want us to notice as well. What do you notice here, guys? Do you see something here? I see market here is creating something like, let me just, I see market creating something like this. A W pattern. Yeah, this is what I see, of which is a W pattern is a reversal pattern. It's here, guys. It's here. Can you see that, guys?
Yes.
Yeah. Yeah, this is a reversal pattern, which means the market is pushing up. And I'm going to show you some other reversal patterns that are taking place here in this market. Because even here, guys, I remember I got this one. Even here, guys, the market, can you, that person, that there's so many people around there, please, can you switch off your mic, please? Please, can you switch off your mic? Hi, Ma Willis, hi. Please, can you switch off your mic? And even here, guys, I can see here there's an M pattern, because I want us to look, to look at those things. Here, guys, there's an M pattern. Yeah. Coming here, from here, because it will never be the straight M, the M that you know. Here, I see something that I can say is something like a head and shoulder. Yeah? Although it's not a perfect head and shoulder, but I can see here, first head, first shoulder, head, and another shoulder. If you go to a smaller time frame, maybe it is an inverted head and shoulder, not just this is a reversal of which is a bullish head and shoulder. Okay, so these are things that, guys, we have to take note of when we are looking at the market. Because, guys, if you say all the time you're gonna keep on waiting of the correction only, you're gonna be missing out. This is another information. I never shared this information about reversal patterns and all the stuff. Why? Because I wanted you guys to get familiar with the structure, to get familiar with impulse correction, and thereafter now we can look at these reversal patterns, because they're very powerful, guys. They're very, very powerful. Né? Because look at this one first. This M here, push all the way down here on this 4-hour time frame. What happened when it gets here? Another M again, guys. It's pushing up. So we don't know what's gonna happen when it comes here. Maybe it's gonna create a head and shoulder, guys. I don't know. We will see. For those who doesn't know how the head and shoulder look like, it's something like this, guys. This is a head and shoulder pattern. Okay, it's something like this, guys. Head and shoulder. It's written here. It's not my name. I'm not just creating this, guys. I'm not. It's head and shoulder pattern, guys. It's here. Yeah? Head and shoulder. So we have to look for all these patterns, guys, in the market in order to capitalize in the market. Are we all together?
Yes.
Thank you. Thank you. I have to keep on checking. You guys, I don't trust you can be looted anytime. Just kidding. I'm just kidding. I'm just kidding. What did I do now with my line? Okay, let me just put it back here. I'm just kidding. I don't want people who are serious. I want us to laugh, guys. I want us to laugh and enjoy this. Let's go to 1 hour time frame now. Let's go to 1 hour time frame and see other possibilities, other chances. What is happening? What is happening, guys? We saw that on 4 hour time frame, we have this correction here, né? Of which now we are waiting for what? We are waiting for the market. If the market breaks this correction here, we can enter here. Let me just move this. Why am I using this? Let me just move it. I prefer to use now these errors. Okay, yeah. Okay, it's fine. Let me just move this. Sorry. So now we are waiting for the market. If the market breaks this structure here, we're gonna enter here. Okay, we're gonna enter here as soon as it breaks here, because what we're seeing is this impulse pushing up, and there's this correction. If it breaks here, yes, we enter here, and our stop loss gonna be just here. Okay, gonna be just here. but we can still go to a lower time frame and check what is happening on a lower time frame. Guys, I don't want to dwell on this and look for all these correction and unpass and all that stuff. No, I'm not going to dwell on that because we know, guys. But guys, can you see now this W pattern? How does it look like now? You see now, it's the more we go down, the more we go to a lower time frame, to lower time frames, I mean, it becomes more clear. Now, you can see this W pattern. Obvious, we are pushing up. Here's this M pattern I was talking about. Yeah? Obvious, we are pushing down. So we have to look for these patterns. Even here, guys, there was another opportunity here, but I'm not going to dwell on such things here. There's a correction here. You see, there's a correction here. There's a correction, meaning here now, impulse, correction, you enter just below here. You enter just below here, and your stop loss is just above here. That's it. Okay. That's it. So now we can see that we are here on 1 hour. But what we are still expecting, because from a daily time frame, it showed us that the market is pushing up. So we are going to this line. We were approaching this line. We're gonna break these highs because they are here. These are highs. So we're gonna break these highs to this area. And I expect the market to push down. If it doesn't push down, it's still fine, because what the market can do when it gets there, it can just do this. It can just push from here, come here, come and retest here, the old highs, and just push up straight. That is possible. Anything is possible with the market. But what is more interesting for me is how the market gonna approach this line, this new highs. If the market approach the new highs in a correctional manner, for instance, push up here and start pushing like this. What it will be telling me. It will be telling me that the next thing, we're not gonna get on top there, but we'll be pushing down. That is another pattern, guys. Who can tell me which pattern is this? I've been sending patterns, guys. I've been sending you patterns, guys. Which patterns is this?
Ascending pattern.
Ascending pattern. Good try. Good try. Which pattern is this, guys? Okay. I'm gonna go and show you. Guys. I always say, guys, I'm gonna show you. It's not a triangle. It's not a triangle pattern. It's not a thingy. It's a. Hey, what is this? Wait, why is running away now? Why is running away? Okay, it should come back now. It's
very short what?
Yeah, but it's for bearish. But now this word is running away, man. Not commentary. It's a falling wedge. It's a falling wedge. It's a falling wedge. It's a falling wedge pattern. Yeah, it's a falling reversal. It's a falling wedge reversal pattern. I think, yeah, exactly. So this pattern. Yes, sir. Yes, ma'am.
Even it's rising.
Is it
rising wedge? Because it's
rising?
Not falling,
yes, it's rising. Yes, it's a rising wedge. A rising wedge, but it's a reversal pattern though. At the end of the day. Exactly. Yeah. Yes. Thank you for copying. Stop copying. I'm just kidding. So guys, what I'm interested in is how the market gonna get to these high highs. But if the market gets here, for instance, if the market gets here impassively, for instance, if the market gets here impassively and just, I'll expect the market come here, maybe come back here and retest and still push up if possible. You see, so that's what anything is possible. Or from here, the market can just push down straight. Anything is possible, guys. Anything is possible. But what's gonna determine is that excuse, are the candlesticks by that time. Now, the candlesticks are the ones that are going to tell us what is happening. So, guys, let's go to 15-minute time frame, because in 15-minute time frame and 5 minutes, that's where we get our entries. I don't know if there's any question, guys, regarding what I just said now. Any question? Any question? No question. I pass. I hope you are still here, guys. I don't trust you. You might be looted. Okay, this is a correction that I've been talking about, guys. So another thing, guys, that's what I always say. For instance, you see that Mr. D, you cut this candlestick out. Why? If you want to get so many lines, now you want to get so many touches in a thing, and there's something called a false breakout. This, I regard this as a false breakout, trying to deceive you, not to see not to see exactly where are we headed. These things, they try to deceive you. Okay, guys. Oh, I thought somebody was talking. Guys, another thing, guys, the other day, I think we're trading, I think we are still here because I wanted to show you something. I wanted to show you something, guys. I wanted to show you something. I can't remember when was that thingy I saw. That was a head and shoulder pattern that I did notice when I was analyzing. It's not here though. It's not here because it's still new. It's still new. It's not here. I think it should be somewhere around. Somewhere around. No, I don't see it, guys. I don't see it, guys. I don't see it anywhere. Let us proceed. Let us proceed, guys. Let us proceed. I think if you go to 5-minute time frame, I want to check something. If you go to 5-minute time frame, let me just check here. If I go to 5-minute time frame, if I'll see what I'm looking for. No, I think I'll spend the whole day looking for this pattern. But if I see it on, I'll just forward it in the group. I can hear me, guys. Who's put me on the last week? I don't know. I can hear me. I can hear myself. So, guys, yeah, on 15-minute time frame, that's where we are right now. On 15-minute time frame, we are here. Yeah. So I'm expecting that the market can still push up. You can even place a buy here and your stop loss be just underneath here. Okay, you can place a buy here. Your stop loss can be here, just underneath here, if you want. But I don't think now, because this will take long. Because if you have noticed, the market is pushing up very slowly. It's not giving us that direction that we normally see in the market, the way US30 normally takes off and all the stuff. We are not seeing this week since yesterday. As soon as the market opened on Monday morning, we didn't see all this that we normally see in the market. This movement, this volatility, we didn't see it. Sorry, that English word, volatility. But I got it right. Let me repeat it. Volatility. Yeah. We didn't see that taking place this week. But let me go to 5-minute time frame as well before I go to these zones. 5-minute time frame, you can see this. All this is still falling under the correction. Can you see, guys? All this is still falling under correction. There's nothing tangible here that we can work on, because all this has been falling under this correction. We haven't seen these moves. You see these moves that we normally see on US30, this move that are sharp pushing up and Nasdaq, but we are not seeing. Check these weeks, guys. I was with Grace today. We are talking about these weeks. Check these weeks. Check these weeks, guys. And another thing that I want to enlighten, guys, on this. Let's say here, these weeks, let's say you see the market is doing this, and maybe this candle, red candle, come and close here. Already you have seen these weeks. What is your next move? Do you still consider this? No, maybe, okay, let me say no, because it's a bearish candle, this one I'm making an example with. Let me say this blue candle, push up and close above this, and you can see on the left-hand side that there are wicks here. So what is the next move, guys? You tell me, what is the next move? What, just predict the next candle. What the next candle gonna do? If the market closes above these wicks, just here, even not even above, just here on these wicks, what does it tell you? It tells you that the market gonna still push up. Okay.
Yes.
If you come across that, I want that to keep in your mind, guys, because we normally see this manipulation. We normally see that this manipulation. This candle is pushing up and close here above this or in the same level as this wicks. So what happened is the market is still gonna push up. The next candle, we expect the next candle to push up. Same thing that happens to we are trading Euro USD today. And that trade, man, that trade, guys, it played with our emotions. But anyway, it's fine because it pushed. It pushed. Okay, let me just go. I'm gonna go to the trade now. Okay, I mean, I'm gonna go 5 minutes, guys. Let me just go. Okay, before I go to the trade, let me just go back to the zones, guys. To those people who like to trade zones, like for instance, this how I was when I started trading. I was taught that I must. This is what I was taught to do. They told me to do this. Hey, English. Hey, not my mother language. Anyway, I'm not an English teacher. Okay. Excuses. So when you mark the zones, guys, normally what you do, I'm gonna mark these zones. Né? This line is not here. Okay, cool. But anyway, it's cool. Okay, I'll say, okay, here I've seen so many touches here. Marking the zones, guys. Now, touches here. I see touches here. Okay. Yeah, I'm marking the zones. I think Liacha is still here. Okay, here. See something here? Because normally when you trade support and resistance, that's what we are told to do, né? You put the lines where the market is constructing, isn't it?
Yes.
Yeah, that's what you do here. Okay, where else here? See something here? This one, I think this line can go as much as touch here is still fine. No, because it doesn't touch there. It's fine. Let us put it here. It's okay. So we expect that next time the market gonna come here in this line and just fail, isn't it? And fail to break through or be a struggle zone. So guys, if now, let's say now, okay, let me not just waste your time. If now, let's say, okay, I'm predicting this market gonna go down. So which means I'm expecting that this market can be hindered here in this line. Yeah? I'm expecting that this market, if it pushes down, it's gonna be hindered here. Yeah? So which means my target is coming here. I'm done. Okay? Or my target will be here if it passes there. If it passes again, my target will be here, isn't it? Pass again, my target is here. Because I'm expecting that anything can happen here in the market, isn't it? So for me, guys, these lines, they mean nothing, honestly. They mean nothing because I've seen trade. This is how I started trading. This is how I started trading. And most people, they're still using this, and of which is not a problem. I always say, if it's working for you, continue to use it. If those indicators are still working for you, continue to use it. Don't stop using them if it's something that is working for you. But I tried it. It worked for, not that it worked for some time, but I noticed that it was limiting me. Ne? It was limiting me. As I said, like for instance, I think the market was, we're still on 15-minute time frame. The market was here. I think it was here. Okay. I went to on 15-minute time frame or 1 hour. Let me go to 1 hour because I think I was on 1 hour when I gave signal that the market gonna be pushing up. It was 1 hour here. Yeah. I said I sent this signal on the team. Said the market gonna break here. Stop loss gonna be here. Our target will be up until we get to this zone. I still have that, and the market is still pushing up, isn't it? But if I'm trading the zones, I'm going to be worried about this one. I'm going to be worried about this zone here. What the market will do when it gets here. Yes, it's going to be an area of struggle, because if you look here, the market struggled a little bit here. In fact, it didn't struggle, because if you check here, this was my zone. I did mark this zone as my first stop loss. And the market pushed above and came back and retest. The market pushed above and came back and retest, guys. You see that? And the market came back again and retest here. And now the market is pushing up. Can you guys see that?
Yes.
What I'm interested in, how the market, because I know the market is still going to push up. So I'm interested in all this journey, because if you can place it, if you can place you steady and just hold it, it will get here. I'm telling you, it will get here. Guys, it was good being with you. My time is up. I'm about to be cut off by Zoom. I don't want to be cut off, guys. And I really, really enjoy this time with you guys. I hope you have learned something. And the zones, I still mark the zones like this. I hope you enjoyed it. If you have any questions, guys, you can go back to the group and ask the questions, and I'll be able to answer, and just take the screenshot there back to the group. I hope you guys are good. Thank you so much for sticking with me. Thank you so much for believing in me. And I also believe in you. Let us forget about the past and continue pushing, guys.